Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial jargon so you don't have to. And today we are diving into Voya Financial's latest filing. Get ready for some insights that are anything but boring. Before we start, if you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below, so pop on over after this video. In this particular report from Voya Financial Incorporated Voya, we are getting a peek into their strategy and outlook. Think of it as a quick update from the company to the investors on their game plan. The date on this report is the 9th of December 2025. Now, this isn't just any old update. This filing is like a mini shareholder meeting detailing what the company is planning and how it's performing. Voya is telling us about their money maneuvers and how they're investing. One of the key things Voya reports on is its stock. They have common stock, which pretty much represents ownership in the company, and this is traded on the New York Stock Exchange under the ticker symbol Voya. They also have something called depositary shares. Now that sounds fancy, but it represents a piece of their preferred stock Voya Group. So essentially Voya is letting the world know about two main things, their regular stock and their more specialized preferred stock. Now let's get to the juicy part, the news inside this filing. Voya is telling us they are planning to buy back a lot of their own stock. For the final 3 months of 2025, they are setting aside $100 million for this. This is a big signal to the market. When a company buys back its shares, it often means management believes the stock is undervalued and is a good investment. It also reduces the number of shares floating around, which can boost earnings per share. And they are not stopping there. They are also planning to launch a new plan to buy back an additional $150 million worth of stock in the first few months of 2026. This shows a continued commitment to returning capital to shareholders. It could mean they are confident about their future earnings and believe this is a good way to reward investors. Beyond stock buybacks, Voya is also giving us a glimpse into their investment income. They expect their alternative investments to bring in between $42 and $57 million before taxes and certain compensation costs. Alternative investments are things like private equity hedge funds or real estate, not your typical stocks and bonds. They can offer diversification and potentially higher returns, but often come with higher risk. The midpoint of that range signals an annualized return of 9%. This is a decent return on those types of investments and shows they are actively managing their investment portfolio to generate income. This income is crucial for the overall financial health of the company. Voya is being upfront that this is a preview. They are promising more details will come in February 2026 when they will have their full quarterly and yearly earnings call. This means these numbers are estimates and could be adjusted as they finalize their reports. Now, looking at this filings overall, Voya Financial seems to be taking a proactive approach to managing its capital. The significant share repurchase plans signal confidence in their business and a desire to reward shareholders. Their alternative investment income projection also points to a strategy of seeking diverse income streams. The company appears to be in a strong position focusing on shareholder value and prudent investment management. And finally, the signature Julie Watson, Vice President Counsel and Corporate Secretary, signs off on this report, dated the 9th of December 2025. This official sign-off means the company is formally submitting this information. So what does all this mean for you? Voya is essentially telling its investors, hey, we are financially healthy, we have a plan to return capital to you, and we are actively growing our income through smart investments. The big share buybacks are a clear sign that management believes the company's stock is a good deal right now. However, it is always important to remember that forward-looking statements like those in this report are just projections. Actual results could differ due to unforeseen market conditions, economic shifts, or internal company challenges. While the alternative investment income looks promising, it also introduces a layer of risk that investors should be aware of. In conclusion, Voya Financial Incorporated appears to be on a solid path. Their strategic focus on capital deployment through share buybacks and their efforts to generate income from alternative investments are positive signs for future growth and shareholder returns. The company is clearly communicating its intentions and providing a degree of transparency that investors appreciate. Alright, that is our breakdown of Voya Financial's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.